Well, friends, we're in the midst of a record-setting run for earnings season. Let's talk about it on the Weekend Update. Okay, friends, let's talk about our strong start to earnings. Here's what you need to know. First up, earnings season continues into record territory. We have a record-setting earnings run going on right now. And here's what I mean by that. First, we're going to look at the S&P 500. This is the same way we've always looked at it. And of course, our record-setting run continues to send us further into the clouds. But as you look at this chart, what do you notice? Well, red is the S&P 500, orange is the 50-day, same way we've always been looking at it, purple is the 200-day, and what you see here is a very strong trending market. So the market is at all-time highs and continues to grind higher. Certainly the good news coming out of earnings is helping this ascent. And we have our golden cross of the 50 over the 200. We have our increase in the slope upwards of the 200-day. This is a market that's moving and shaking right now. The only thing I will say, the only negative is that eventually this is going to have to slow down, and there is some talk that maybe we'll enter a consolidation phase after this Q2 earnings is done, especially with as robust as the market is right now. But at least for today right now, if I look at this market trend, this is a strongly trending market. We're at all-time highs. Things look great. And one of the reasons why things look great is Q2 earnings is just unbelievable. We are on a record-setting run right now. This is from Market Desk, and this is about S&P 500 companies beating earnings per share estimates. On average, in general, any earnings season, roughly around 75% of companies, that's the long run average, will beat their earnings estimates. Sometimes it's higher, sometimes it's lower, but it's generally in that 70 to 75 zone, maybe even 80, 81, 82 in particularly strong periods of time. We're all the way up at 87% right now. 87% of companies that are coming into earnings are beating their estimates. And this is just extremely strong. This is fuel for the fire. What this tells you is, even last week, if you'll remember, when I was talking about earnings season, I said, well, maybe the quarter will be a little messy. I thought maybe there would be some tariff impact, not necessarily from the tariffs, but maybe from people front-loading their purchases and then holding off, people being afraid of Donald Trump, the media having some impact, if any, on people. And what corporations are telling us is, no, that absolutely did not happen. The economy was just chugging along the same way it always was. And so the analysts have lowered their estimates, and that's what's creating this really strong beat rate that we're seeing here. If we look at it in a different way, if we look at it by number of companies that have reported and also by sector, what you see here is you just see extremely strong economic activity across the board. Several sectors have 100% earnings beat right now. And if you look, it's pretty broad-based here. The only area where we've got a little bit of challenge is in materials. No surprise there. And I'm really not worried about materials companies not hitting their earnings estimates. They can't control the price of what they sell. So for them, it's a little bit more of a mixed bag always. I am more interested in the businesses that can control pricing, the businesses that do matter to this economy, the large businesses that matter to the market. They're just having a great run right now. It wasn't all great, though. If there was a fly in the ointment, it comes from two areas. First area was Tesla. And so this is something that I'm going to be watching for. We heard from NXP Semiconductor, which makes semiconductors for autos. We heard from Tesla now. We might be seeing a little bit of an auto slowdown, and I can promise you tariffs on Japanese imports, aka cars, tariffs on steel is not going to help that market. Tesla in particular had a really rough earnings report. The stock was fine, I think, for the most part, but the earnings report was pretty rough. Q2 profit fell 16%. Their free cash flow dropped something like 87%. Basically, nearly all of the cash that the business generates has been wiped out. They got a tough one. They're doing pivots to AI and robotics, so I think they'll be fine. They're Magnificent Seven anointed for a reason. But it's very interesting to see the weakness in the auto sector is coming through pretty strongly on this earnings season. The other area where there's weakness, chips. But not just any chips, chips in the non-AI space. So if you look at an Intel, if you look at, I think Intel's having a pretty rough go of it, down something like 10% today, give or take, on a miss on EPS, and basically not a whole lot of good stuff coming through in their earnings report. But we also saw this with Texas Instruments and NXP, which is, chips in cars and things like that. If you're in the chip space, but you're not in AI, not in data center, not in high performance chips, things look pretty weak for you as well. Even ASML, the, chip material, the chip engineering company, chip supplier, they look pretty rough as well. So what does this all mean? Strong start to earnings? Well, so far, this has been a record-breaking earnings season. Beats are coming in plentiful and bigger than average. So what this tells us is, all that stuff around Liberation Day, I thought there was going to be some impact. Even as early as last week, I was saying, well, we should see some mess. There's no mess. And analysts have lowered their expectations, and companies are very easily stepping over that. There are some soft patches in autos and chips, the non-AI chips. My question is, will other soft patches emerge? Probably not in this earnings season because things are so strong, but the market is just looking great here. Earnings season was good. We're firing on all cylinders. I'll see you next week. Take care. Okay, friends, that was the video. Hope you liked it. If you found it informative, good, entertaining, I'd love if you could scroll down here beneath the video and give me a like there. It helps us out with the algorithm. And then if you want to be notified first of anything new that we upload to the channel, if you come over here, click subscribe, you'll be the first to know as soon as we upload anything. Appreciate it. See you soon.